backward looking, right?
Yeah.
So this is a snapshot from around the 12th of last month. I think recession odds are probably still elevated relative to what is nominal.
Yeah.
But, down from the 50% odds that we may have seen, early April. At Bankrate, much the same as with your audience, we're always trying to take a bit of a long-term view. Sure. I know for traders, those who are trying to get in and out of markets or positions, that's different. The vast majority of Americans need to be thinking about the long term, and part of that means saving for emergencies, for the inevitable rainy day, right? The rainy day isn't here right now, but what's the number one complaint about the economy? It's price levels. What is likely to go up in the current and intermediate terms? Price levels. So there's not going to be any relief from that. And so if you go out, maybe not in front of this office in downtown Washington, but a little beyond the Beltway, ask people, how do you feel about the economy?
Yeah.
They're not feeling too good about it. And so to them, recession, you can have your recession definitions and keep it. We'll make our own judgments about how we're feeling about the economy.
Okay, fair enough. What are you seeing in the numbers here? Stronger than expected payrolls, steady unemployment rate is what the headline's going to read. When you start looking at wages and participation, what does that tell you about this stage of the market?
Well, first of all, I don't want to lean too far forward on the better than expected. The consensus that I was looking at was around 125,000.
Exactly.
We beat that by 14,000. Sure. No one should be going out buying champagne because of
course,
that.
Absolutely. And by the way, that could be revised in a month as we've been seeing very often.
That's perhaps the most important point, because this was the fourth straight month of downward revisions and the sharpest downward revisions that we've had in that series, minus 95,000 the previous 2 months. That takes a lot of the would-be luster off of this beating expectations.
Understood. Well, when you consider the potential impact of the Doge and federal workforce cuts, a couple of months ago, you were reading and hearing all the same stories I was. It was going to crater the job market in certainly areas like Washington, D.C. We still haven't seen the tens of thousands of job losses on the government level, have we?
They haven't showed up yet. Many of these people are still on severance. So
they're not claiming.
It's not showing up. And the good news for those affected people is that they would be looking for work at a time when the unemployment rate is still regarded as historically low at 4.2%. But let's wait till September, October, and see what the jobless claims and that component look like. As you know, Challenger Gray and Christmas earlier in the week talked about accelerating job cut announcements in sectors where we hadn't been seeing those occupying the top two positions. That was services and retailing, and hundreds of thousands of Doge-related job cut announcements elsewhere. So I think, I'm not here to preach gloom and doom. I'm here to preach caution.
Sure.
And to look past the immediate headline numbers and try to think about a variety of scenarios that could be developing here in the second half of the year, which is weeks away.
Well, this is why we're asking these questions, Mark Hamrick. We heard from President Trump this morning a number of times, and I'm going to ask you about his take on Jay Powell in a moment, but his first reaction was, America is hot. This is all caps. 6 months ago, it was cold as ice. Border is closed, prices are down, wages are up. Our own Michael McKee took a harder look at that and went back 6 months and found that none of that is actually factual. Prices are not down from 6 months ago. Wages are not up from 6 months ago. He's calling at the same time for a full point cut from Jay Powell. He's not going to get that, is he?
Well, first of all, how does he come to that conclusion or recommendation when on the one hand he's talking about a robust economy?
Yeah, we're hot, but we need to cut.
And when do you cut by 100 basis points? In a crisis.
Yes, exactly. Can you imagine? Okay, let's talk about that. Imagine if the Fed announced today between meetings it was cutting by a full percentage point. What would happen to the market?
I mean, you'd have red lights spinning in here, and it'd be breaking news all day long.
It's been a long time since we've had a surprise
We
cut.
don't need to have
What's
that.
Jay Powell looking at, though, when he sees data like this, and you're looking ahead urging caution 6 months from now, reminding us of a dual mandate. They're concerned about this job market, too.
Well, first of all, as you know, the expectation right now is we don't have any rate cuts probably for at least the next two meetings, which is June 18th and then July, and then we get into mid-September. I think that they'll continue to say that, and we're, a week and a half away from the next announcement and news conference. I think they'll continue to say the monetary policy is in a good place. Obviously, that's why they're not moving it. And they want to be responsive to the way the economy unfolds in the months ahead. He regards himself, and they have a take with the law that they are effectively bulletproof from the president's rhetoric. And so, if anything, he wants to maintain the credibility not only of the institution that he and his colleagues serve, but also the roughly year that he has left as chair. He wants to maintain the credibility of all that. So the last thing in the world that he's going to do is get into an Elon Musk style, retort.